Hey, welcome. Today, we are going to tackle two of the most important numbers in any business, net income and profit margin. Trust me, by the end of this, you'll know exactly how to figure out if a business is actually making any money.
So let's just start with the biggest question, right? The one that keeps every business owner up at night. Is my business really making money? It sounds so simple, but, the answer can be a little more complicated than you think. Let's figure out how to answer that with total confidence.
All right, first up, we're going to look past those big, flashy sales numbers. It's time to find out what a business actually gets to keep in its pocket.
Look, it's so easy to get excited about all the cash coming in the door, right? We call that revenue. But here's the thing. Revenue is just the starting point. It's the top line. It's the total amount you get from sales before a single bill is paid. It really doesn't tell you a thing about how profitable you are.
Okay, this is the number that truly matters, net income. The easiest way to think about it is this. It's the money that's left over after you've paid for absolutely everything it takes to run the business. It's the real measure of profit, and that's why you always hear it called the bottom line. Now, just a quick heads up, this isn't the same as cash in the bank. That's a whole other thing called cash flow. But net income, that's your ultimate profitability scorecard.
So how in the world do we find this super important bottom line? Well, the great news is the math is actually surprisingly simple. Let's break it down right now.
And there it is, the big, powerful formula. You just take all the money that came in, that's your revenue, and you subtract all the money that went out, your expenses. Whatever's left, that's your net income. Yep, it's really that simple.
All right, to make this totally crystal clear, let's walk through a real-world example. For the next few minutes, we are all going to run our very own small coffee shop together.
So let's say our little coffee shop is doing pretty well. In 1 month, we sell enough lattes, cappuccinos, and croissants to bring in $20,000. That's our revenue. That's our starting point.
But of course, we don't get to keep all that money. Not even close. We've got to pay for, well, everything on this list. And probably more. The rent on our cool little spot, our amazing baristas' salaries, all the supplies like coffee beans and milk, advertising to get people in the door, the electric bill, and yeah, even taxes.
So when we add up all those costs for the month, they come out to a grand total of $15,000. That's all the money that went out of the business.
And now, for the moment of truth. We take our $20,000 in revenue, we subtract our $15,000 in expenses, and what are we left with? $5,000. That is our net income. That's the actual, real profit our coffee shop made this month. Pretty cool, huh?
Now, knowing you made $5,000 is great. It feels good. But what if I told you there's an even more powerful way to look at that number? This is where we stop thinking in dollars and start thinking in percentages.
And that brings us to the net profit margin. See, this isn't about how much money you made in total. It's about how much of your revenue you actually got to keep. This is a huge indicator of how efficiently your business turns a sale into actual profit.
And guess what? The calculation is just as easy. We take our net income, the $5,000, and we divide it by our total revenue, the $20,000. That gives us 0.25. Then you just multiply that by 100 to make it a percentage, and there you have it, a profit margin of 25%.
So what does that actually mean? It's simple. A 25% profit margin means that for every single dollar that a customer spends in our coffee shop, we get to keep 25 cents as pure profit after every single bill has been paid. This, of course, leads to the next big question. Is 25% any good? How do you even know if your profit margin is strong or weak or just average? Let's dive into that.
This is where you can really see the power of profit margin. Check out Coffee Shop B down the street. It makes the exact same revenue as us, $20,000. But its expenses are way higher, at $19,000. So its net income is only $1,000, which gives it a profit margin of just 5%.
I mean, the difference is just staggering when you see it like this. Even though both shops sold the same amount of coffee, our shop is literally 5 times more profitable. We're just way more efficient at turning those sales into cash, and this chart shows a gap that's just impossible to ignore.
But here's the catch. What's good is all about context. It totally depends on your industry. A grocery store, for example, might have a tiny margin, like 2 to 5%, because they sell massive volumes of stuff. But then a software company could easily have a margin over 20%, because, it costs them almost nothing to sell one more copy of their product. The real key is to compare yourself to your peers and, just as importantly, to your own performance last year to see if you're getting better.
Okay, so knowing your numbers is step one. But now let's get to the fun part, the action. How can you actually improve them and make your business more profitable?
You know, when it comes right down to it, there are really only two levers you can pull. You can either increase the money coming in, or you can decrease the money going out. On the revenue side, maybe you raise prices just a little or find more customers. On the expense side, maybe you find a cheaper supplier or find clever ways to reduce waste. Even tiny changes to either of these levers can have a massive impact on your bottom line.
So let's wrap this up with the key takeaways. Just remember, net income is your final profit in dollars. That's the bottom line. Profit margin turns that into a percentage, and that's the real measure of your efficiency. It is absolutely crucial to compare that margin to others in your industry, or even just against yourself over time. And finally, the most important lesson here is that small, consistent changes to what comes in or what goes out are the real secret to improving both of these numbers.
And that brings us to one final thought for you to take away. Now that you get how it all works, think about your own business, or maybe one you know really well. What's just one small, specific change you could make tomorrow to start improving that all-important bottom line?